Good morning, good afternoon, good evening, whatever the case may be. Welcome to the MSMF Wealth Management Podcast for July of 2025.
Crazy.
Cody, how are we doing?
I'm doing great. You?
I'm superb. Craig, how about you?
Doing awesome.
Yeah, so you know what we're going to talk about today? The one big beautiful bill that is now the one big beautiful act.
OBBBA.
OBBA. We're going to try to figure out what's all the hoopla surrounding this.
Yeah.
We were telling some politician jokes before we started, but we're not going to probably.
They were pretty funny.
Probably not going to get into those, but.
Not compliance approved.
No, definitely not compliance approved. They certainly are true. And given this act and everything that has gone into it and all the freaking tentacles it has, it certainly is appropriate. But let's dive into the one big beautiful act, and let's try to understand and strip away the rhetoric. There are a lot of supporters and a lot of detractors, and my take on that is always, if a lot of people love something, a lot of people hate the same thing, there must be some good in it somewhere. And I think for all our clients, there are some good things in here, and maybe we can kind of dive into that. I will say, for my friends at compliance, we are not CPAs, we are not tax professionals. We are CFPs, Certified Financial Planners, so we do have some level of hardcore knowledge on taxes and how tax returns flow and how it impacts our clients. But definitely, if you have someone do your taxes for you, they're going to also help understanding the impact of all this. And if you do your own taxes, hopefully you're using some type of program, and a lot of these things will be baked into it. But there's a lot of provisions here. Mm-hmm. So what we'll do is we'll dive into this. I'm going to ask you guys to cover some of the key provisions and really try to help our clients and their families and any potential prospects this might end up in front of what this impact is, because almost all of our clients will probably be impacted in one way, shape, or form.
Right.
So the OBBA was signed into law on July 4th, 2025, and it covers a wide range of stuff. So let's dive into it. Craig, why don't you kick us off and hit some of the key points that you see that will impact our clients?
Sure. So the biggest part of the bill was the extension of the TCJA, the Trump tax cuts that were passed back in 2017. So I know in a lot of our client meetings, we've been over that chart showing the compare and contrast of what tax brackets would have been in 2026 if it wasn't passed. For those of you that have been in the meeting, it's that green bracket on the left that is staying current. So basically, the current tax rates have been extended. The biggest thing with this is that they've been extended permanently. So we won't have to go through this dog and pony show again in 7 to 10 years. To Mark's point, they can still be changed. They will be changed eventually, but they won't sunset like they did back in 2017, which is why they had to vote on it this year. It will take another Congress, new administration to change the taxes, and they'll have to vote on that. But they won't expire. It will require new legislation. One of the other big changes, one of the points of contention, particularly for Republicans that were in high tax states, New York was a big one, was the SALT deduction, the state and local tax. So that was increased from $10,000 to $40,000. So you conduct up to $40,000 of state and local taxes from your tax returns. Caveat with that, you have to be under $500,000 in income, and they do sunset that portion of it in 2030. So after 2029, it goes back to the $10,000. So that is one of the minor changes to the bill, the state and local tax deduction. One of the other big ones was big on the campaign trail for Trump, the tips and overtime that was included in this bill. So for the tips portion, individuals can deduct up to $25,000 of qualified tips as long as your income's under $150,000. That sunsets in 2028. There's a theme here, so there's going to be a lot of things that sunset at some point. So again, contact your CPA for further verification. But overtime was also in there, so no tax on overtime. For that one, it's $12,500 for individuals, or $25,000 in joint overtime wages are deductible. Again, that ends in 2028 as well, and that has a $300,000 joint income limit. The other one in there, so one of the things that was not in the bill that was talked about in the campaign was no tax on Social Security. So there is not technically a change to taxing of Social Security. That stays the same. What they did add to kind of try to counteract that was an additional senior deduction of $6,000 per person. So again, this is only from 25 to 28. If you are 65 between 2025 or 2028, and it's in the year you turn 65. So if you turn 65 in 2025, you can get this deduction. You can deduct an extra $6,000 off your taxes. That is in addition to the already $1,600 enhanced senior deduction that's always been there since the last tax bill. So pretty good saving for seniors there. I think the Social Security Administration said about 90% of people would not have to pay taxes on their Social Security because of that extra deduction.
Oh, wow.
So again, no changes to the actual taxation of it, but that deduction will help you a lot on the income taxes. Those were kind of the big four that I saw in the bill.
So, a couple questions. First of all, just a comment, and you can comment on this. These things that are permanent versus these things that are going to sunset. That's all about making the math work on this thing relative to revenue and our lack of revenue for the government, right?
Right. So we have a minor debt problem in this country.
Minor. That's funny. You just made a joke.
So with this being a reconciliation bill, it had to be budget neutral.
Right.
Again, not going to get into that. But to try to offset some of these provisions with the lower tax revenue, they did have to make some of them sunset. Again, the main tax brackets, what we're currently in, those are extended permanently, so that is a big one. But a lot of these other provisions will have to sunset to make the revenue offset the expenses from the extended tax cuts.
Gotcha. And then the other thing is because again, you're right. When the president was on the campaign trail, it was big on no tax on tips, no on overtime, no tax on Social Security. But that's not the way that came out. They're deductions. They're not. It's
Correct.
not just blanket no tax on it.
That's right. You got it.
And particularly on the tips and overtime, you got issues there because a lot of those both actually are factored in on employment taxes and some of these other things. So you can't just wave your magic scepter and say, no king, sorry. You can't, that was a joke. Come on, funny. You can't just say, hey, there's not going to be tax on it because there's other things that are tied into it, which is why it ended up as a deduction.
Yep.
Okay.
You got it.
But that's a lot. Anything else you want to toss in there?
No, I think that's enough.
Okay. I'll come back to you. Yeah. Cody, batter
Yes.
up.
All right.
We just scratched the surface, so have at it.
All right. So one of the changes in there as well is the child and dependent care deduction that you get, and I think it's currently $2,000. Now it's going to be $2,200, but also set to adjust for inflation. So
Credit, not deduction.
oh, I'm sorry, credit.
Yeah. And
Yeah.
Yep.
I usually need help with that. 'Cause
Big
there's a
difference.
Yep.
Why don't you go ahead and explain that while we're talking through it?
Yeah, so a deduction would be, let's say it's 2,000, you made 30 grand. It'd be as if you made 28 grand when you go into your taxes. A credit, you're actually getting 2,000 of phantom dollars to offset taxes owed.
So it's off your taxes versus off
Yeah,
right.
so credits are usually a lot better than
We like
deductions.
credits.
Yeah, credits are nice.
Credits are your friend.
So that's a big one that I think will have that's obviously going to have a big impact on everyone who has kids.
Sure.
A lot of clients that we help out. Kind of piggybacking that. So there's actually a lot of student loan stuff that was in here too, and I think it was kind of. I didn't know about it all. It's not really talked about much, but they're pretty big changes. So the Parent Plus loan cap, there was no federal cap. And now it's going to be a cap of $60,000 total borrowing per student. So that's a big one if you're out there looking for what kind of loan programs are available. Also the repayment. That's probably the biggest change I think in there because it affects everyone who currently has federal loans. Right now they are before the 4th I guess they were income driven repayment. And now that's going to be replaced by two different, I guess, plans, a 10-year standard or a 30-year revised affordable plan. I'm guessing you're going to have to be able to qualify for hardships and stuff if you want to be able to stretch it over 30. So really the big thing is you got student loans out there. It looks like you're going to be set up on a 10-year payment plan.
And that's effective 25 or 26?
Oh, that's a good one. I don't know. We'll have to get back on that one.
Yeah.
25.
We'll get back to you on that.
A lot of them look like they started in 26, but I also see a lot of 25s here.
Right.
Yeah. Yeah, that's going to be a big one.
And there's no grandfathering under current scenarios.
Not that
right?
I can see in here. That's what's changing.
Okay.
Yeah.
All right.
And graduate and professional student loans, you basically it was unlimited. You wanted to go to grad school and stuff, you could take on the debt, and there was no cap on it. Now there's going to be a lifetime borrowing cap of if you're a graduate student, $100,000, and if you're going to be like a doctoral professional, it's going to be capped at $200,000. So, from an institution standpoint of people furthering their degrees, that there's going to have to be something that I think will happen from colleges. I bet they're probably going to have to start lowering some of their the cost of education.
Those caps for a graduate degree or a professional like a doctor, that's not going to cover it.
Right.
So
Yeah. Yeah. So those, that was a big area that I kind of just glanced over. I didn't even know about it until I was reading through there, and I was like, oh, well, that's great. I fall in that category. Auto loan interest deduction. So this is another one that's a lot of stuff, tentacles, very confusing.
Read the fine print.
I think the car has to be made in 2025 It's from 2025 to 2028. Is that right, Craig?
Yep.
Yeah. And you can deduct up to $10,000 of interest per year with certain income limitations.
And it has to be American made.
And that's a big one. Yes, it has to be American made. But if you have $10,000 of auto loan interest, that's what a lot of mortgages are. So.
Yeah.
Charitable giving reform. So there currently was a $300 above the line deduction that was in place. Now it's going to be basically $1,000 that you can actually deduct and not have to itemize your taxes. And I think was that in
Per person.
Just
Yeah.
per person.
Yep.
Yeah. And for small business owners, there's that 20% QBI, the pass-through deduction that's being made permanent.
Mm-hmm.
So, out of all those little changes there, I think probably the biggest effect that's going to have on people that are clients of ours or people that you may know is going to be that education loan in there, because, again, we'll have to figure out if that's 2025 or 2026. Yeah.
Yeah, and isn't there's also 100% deduction on equipment, right, for business owners?
Oh, well, yeah, that is a big one.
Yep.
Yeah, that Section 179 is coming back into
Yeah.
play.
That's a big one.
It basically allows you to fast track the deduction on certain
Computers,
expenses.
equipment.
Yeah. Research,
You can deduct the whole 100%.
research and development. That's a
Yep.
big one. That's going to
Yep.
help out a lot of businesses in that biotech space and things like that. I can see how certainly going to help the balance sheets of a lot of companies being able to do that. And farmers and things like that where they're very machine heavy.
Sure. Mhm.
So those are always good things.
Yep.
Putting more money in people's pockets, they're going to spend it. Right.
Right.
So
Right.
yeah.
Okay. That's a lot. There's more. We're not going to cover all of
There's
it.
a lot more.
There was some other contentious.
130 pages.
There were some other contentious areas. We all remember the big argument back and forth between what the work requirements, for instance, on Medicaid and SNAP benefits. Doesn't necessarily affect a lot of our clients, but it's out there. I think there was some misinformation put out there that they were taking a meat cleaver to Medicaid, which isn't really the true. And there was a significant increase in defense and immigration enforcement spending, which my personal opinion, the increase in spending, I have a problem with that because it just goes back and increases our small debt problem. So yeah, there's good parts, bad parts, and like I said, when there's arguments in favor and arguments against, there's got to be some good in there. There's a lot of good in here. I do question with all these tentacles just how we're actually going to officially regulate all this, which I think is, and that's another big part. I mean, we particularly because we go back to the Secure Act and Secure 2.0 had a really significant impact in our business, And we finally got those final regulations from the IRS last year, about a year ago
It
this
took
time.
like 4 or 5 years.
Right.
Right, and so there's going to have to be final regulations issued on all this. And a lot of this stuff is effective this year. It's already July. So what's going to happen when people have to do their taxes next April for this year? All that's kind of remains to be seen. But a lot of good things in it, a lot of head scratchers. It's special interest stuff, I would suspect. But I think a lot of opportunity for our clients. So, we would be here for 7 or 8 hours if we tried to cover every specific part of this and who it applies to and what the pros and cons are, and most of you would fall asleep during that time. So I'll probably leave it at that. I appreciate the great rundown of the key provisions that are going to impact our clients. Let me go back to you, Craig. What of all this information, what's a key takeaway or action item you're gonna leave for our clients?
Sure. So just kind of as it pertains kind of back to the planning aspect, one of the things we've been talking about the last couple of years with the potential changes in tax law were Roth conversions. So obviously with the extension of those, that's absolutely good for our clients as far as taxes are concerned. Still doesn't mean that things like Roth conversions and other tax strategies still aren't prudent, as we talked about. They tax change about every 10 years, so taxes are likely to change at some point in the future. So we'll still be talking through potential strategies with that. As always, reach out if you have any questions, but those are still going to make sense, filling out those lower brackets like we have been. One other small note, just because I know this pertains to me, that was in the bill. If you have a child care FSA, one of the provisions in the bill was they increased the limit on that from $5,000 to $7,500. First time in 40 years that they increased that, so long overdue.
40?
40, yep.
Wow.
Yeah, and that one's not indexed for inflation, obviously. It still is not, but if you do have an FSA for childcare, just know that you can do an extra $2,500 starting in 2026. So not for this year, but next year. They did add a small deduction to that. But,
Dynamite.
yeah.
Awesome. Cody, key takeaways, action items for our clients from your perspective?
Yeah, I mean, from just the little bit that we touched of it, everyone's going to be on this call is going to be impacted with it. So I would certainly utilize, our office to help, go through this and see what kind of impact it could have on you. I mean, it most likely will be a positive impact of some sort. But, as you're reading through it and all the different numbers or years of when they're coming in place, when they're going away, all the caps and all that kind of stuff, it gets a little overwhelming with it. And we'll be getting summaries and stuff that are good that will help us be able to walk you through that.
Right. Absolutely. And appreciate both of you. I think it was a fantastic summary. And I would offer up exactly what Cody and Craig said. Please lean on us. These tax acts get more and more complicated just the last handful of years. They all have so many tentacles, and they're so far-reaching, and we typically have to wait for the IRS to issue final regulations. But the good news is there are definitely strategy and planning opportunities in all of this for most, I would say, the vast majority of you. So please call, use our text line, email. We're here to help you kind of navigate this. Like I said, if you do have someone that prepares your taxes, kind of help you get all dressed up and ready to talk to them, as well as your IRA type provisions, we can help with that. So please lean on us. I know sometimes there's a lot of misinformation out there depending on what media outlets you listen to, and typically the truth is somewhere in the middle, and a lot of these small provisions don't even get covered in the media, so we're here to help you figure that out and navigate it. And again, appreciate you listening. Feel free to share this link with your friends and families, because I'm sure they have some questions on this as well. And I thank you, gentlemen, and I'll look forward to talking to all of you in August.